it takes time for central bank monetary policy decisions to make it through to the system between 12 and 18 months. It's not a crazy idea for them to just sit and pause and see the impact of all of the previous bouts of tightening and the impact that's going to have before they continue. So if they are getting into over-tightening territory, does it not mean that curves could be a lot flatter than where they are?
I think that's absolutely a risk. Further inversion on the curve, especially into stance. But yes, I think central banks are now reaching the point where it's becoming extremely difficult, which is why several of them want to pause, see what is the impact on the economy, and perhaps being forced to re-engage to later. But indeed, I think the risk on the curve is for a further inversion. And actually, if anything, we think that looking at medium to long-term yields, we may have seen the peak already. We may have seen the peak, especially when it comes to euro yields. We have been extremely bearish rates last year. We closed our last outright short position at the start of the year. Then we moved to play the range, but now we are more inclined to get involved, to be long the market again, especially ahead of the summer.
Looking a little bit further out to perhaps 2024 or even further, when do you expect the ECB to begin its easing cycle? And how would you expect the pace to compare to what we've seen in its hiking cycle?
So, looking at the outlook for core inflation and headline inflation, it's looking very likely that it will remain sticky for longer. So we are also expecting at BNP Paribas central banks to cut rates in 2024. However, by no means before 2024. We are looking at a magnitude of 100 basis points for the ECB, which was actually not that different from the market. But I would say perhaps the risk on this front is more to the upside, because if the economy continues to remain relatively resilient, core inflation is unlikely to converge back to 2% for the near future.
And what about the Fed? How do you anticipate the magnitude of the cuts to compare to the Federal Reserve? We're hearing many guests talk about the Fed, when they do begin cutting rates, they're going to have to do it in big increments.
We have a call of roughly 175 to 200 basis points as well for the first year. So again, not too different, which actually reinforce our view that, looking at the curve, looking at what is priced in the market is already pricing a steepening on two stance curve based on this cut, which is already consistent with the soft landing scenario. And basically the market is pricing the fastest steepening on the curve after 2008. For us, it looks overdone. The timing is wrong, the speed is wrong. So I would say, again, the risk reward for two stance steepeners is not looking good for us.